Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. A lot of folks have woken up recently to realize that, hey, my portfolio doesn't always go straight up. What's up with that? Hey, this is actually starting to decline a bit, or maybe it's just choppy. What's going on? And in that case, I think it's worthwhile to understand, or at least approach, have in your mind, one of the greatest investors, Charlie Munger, and his own mental models for addressing the volatility of the stock market and how it can be helpful for you. Now, for those that aren't familiar with Charlie Munger, he's business partners with Warren Buffett. Warren Buffett obviously has, if you're not familiar with Warren Buffett, you should probably close up YouTube right now and go read the Berkshire Hathaway annual letters for the last few decades. And look, it's one of the most successful investment vehicles of all time. And Charlie Munger, Warren Buffett, both billionaires in their own right, both exceptional investors in their own right. But really, where I really respect Charlie Munger a great deal, Warren Buffett as well, is that they're both beacons of rationality. They're really inspirations for saying, hey, no matter what life throws at you, the more rational you can be as you address these challenges, the better off you'll be ultimately. So sort of suck it up, buttercup, and be rational as challenges happen, as adversity naturally happens to everyone. So what's Charlie Munger have to say about managing your portfolio, dealing with potential adversity when it comes to your investments? And so here it is. What's he have to say? He talks about if you're going to be in this game for the long pull, which is the way to do it, i.e. be a long-term investor, short-term, much tougher to play, you better be able to handle a 50% decline without fussing too much about it. He separately said, the value of my partnership went down 50%. This is back when he was running his own hedge fund for family and friends. His investment vehicle dropped 50% in the early 70s. It's a mark of manhood, he said. You better be able to handle it without much fussing. Handle a 50% decline without much fussing. So first of all, I want to know your thoughts on this. So leave a comment below in this video. But as I think about a 50% decline, and based on my own experience on Wall Street over the last two decades, including working at a multi-billion-dollar hedge fund, this happens. You're going to have huge declines. I've personally invested in stocks that drop. One dropped 70% in a day. It was a painful experience, but over the next year it went up 5x, and in the ensuing decade it went up 50x. So you need to understand this volatility, this is the price of admission to play the game. So this is a very valuable mindset, I believe, for new investors to this game, to understand, hey, there's going to be significant volatility, and you better be prepared for potentially 50% declines, especially when it's overlaid with folks like Michael Burry, Dr. Michael Burry, who's also called out how extremely overvalued this market is. So things don't always go straight up. The question is, hey, if my portfolio or an investment drops 50%, how am I supposed to have the mental fortitude to make sure I don't fuss about it, or worse, I panic about it? How do you make sure you don't do something that's adverse to your own long-term desires? And this is where, once again, Charlie Munger and Warren Buffett, their sort of beacon of rationality comes in, which is that they look at every investment from a perspective of what's the intrinsic value. And that's why with every video where I call out a company, I'm usually trying to pencil out like, hey, here's a hypothetical framework for what this intrinsic value could be. And when you see the intrinsic value here and the price is here, it's probably too hard. But when the intrinsic value is here and you think it'll be up here in 5 years from now, and the price is all the way down here, then you should be comfortable. And so the trick here is getting that comfort around intrinsic value. And so how do you do that? I have made a video exclusively for Journey subscribers about thinking about valuation for stocks, but it comes down to understanding what are the fundamentals of this business. Is it unrivaled? Do I think it'll keep growing in the years ahead? That's the key crux of this. And so if you're not really familiar with what this business could look like in 5 years from now, what could their margins look like 5 years from now, the reality is it might not be appropriate for you to be in that investment, because there will be the inevitable pain, adversity, challenge where it goes against you, and then you're sort of saying, wow, I'm sitting on a loss, what do I do now? And this is sort of the next component, is that invariably there will be folks that say, hey, I'm gung-ho about this investment. Then when they face a 30, 40, 50% loss, you know what they do? It is truly tragic. And that point, 50% down, they bail out. They're like, I'm out of here. This is too painful. I don't know how much further it could drop. And that's the challenge. Like I had a college professor call me in March 2009, literally like near the bottom of the market. And they're like, you know what? This is my retirement nest egg. I'm blowing out of everything. And I couldn't talk them out of it. Like it saddens me to this day because they were so shocked by the market drop. They were so shocked to see their financial stocks blow up that they're like, I'm just out of here. And so that's a second question for your own personal journey to think about. Can I weather a 50% drop? What will I do when that invariable drop happens? Because it'll happen when that inevitable drop happens. I don't know when it'll happen, 5, 10, 20 years from now. But someday you will have an investment that drops 50%, maybe next month. And when that happens, how do you react to it? That's the critical part of it. Because if you have the mental fortitude where you're saying, Daniel, I'm out of this if this drops 30%, maybe this game isn't appropriate for you. If you're taking Mr. Market and Mr. Market's quotations, saying, hey, this is the value of this, and you're saying, oh, okay, I'm getting out of here. This might not be the appropriate journey for you. And there are other alternatives where you could do really well. See, a lot of folks don't do well with getting prices quoted to them every day. Whereas in things like, let's say, private equity or real estate, it's not liquid. You don't have the option to bail out. Oh my goodness, you have to take your time on those decisions. So if you are going to get shaken out by the inevitable distress, the inevitable adversity, the inevitable price declines, you need to really think about that. Think about, what am I going to be comfortable holding? Because at the end of the day, you need to know the intrinsic value and the price longer term. Now, how do I personally incorporate Charlie Munger's wisdom and approach to investing for my own personal journey? And for more about my personal journey, you could go to unraveledinvesting.com, click on journey. First week of the month, I call out my full portfolio. Then once during the month, I call out at least one potential multi-bagger or a type of stock that I think has potentially hundreds or even thousands of % upside over time. So that's at unraveledinvesting.com. There's also exclusive, like educational content, as well as a Discord community, exclusive Discord community that we're building out. And so how do I incorporate Charlie Munger's wisdom when I'm thinking about this? And personally, every single investment I make, I fully expect it can drop 50%. That is part of the game. But I also have a plan in my head saying, okay, if this drops 50%, why did it drop 50%? And oftentimes my approach is, yeah, I'll want to buy more if it does. Okay, so if I'll want to buy more if something drops by 50%, what's that mean I have to do today? Okay, that means I'm going to have to sit on a little more cash. So maybe my returns aren't as crazy, aren't crazy good. Don't necessarily chase the market each month or each day, because I'm going to sit on more cash, because I'll be prepared for an event like that. This is my own personal approach. Everyone has to figure out their own personal journey. As I mentioned earlier, some folks may be better suited to just do real estate investing or something like that. Longer term, the question is, it's no doubt in my mind that you want to own equity in something. Because if you're just going to try to work for yourself or try to make a salary your whole life, and that's your goal for retirement, you got to have your money work for you. And that's the key aspect here, is that if you want to make your money work for you, your investments work for you, you better understand that there's real cost to it in terms of the volatility. And that's the way it is with equities, which personally I believe are one of the best returning assets over time and will continue to be over the next, hopefully, century. And so I personally consider it as saying, okay, every investment, be prepared for that 1-2 punch in the face where you see something drop significantly, meaning be able to have a buying approach. 2, have a hedging strategy. Now that's also my own personal approach, where I consider hedging against, let's say, market ETFs. I don't short individual stocks. I don't want to bet against other people's dreams and expectations. But ETFs are, I feel more comfortable on, especially as things get in hyper-valued territory. I did make a video exclusively on how I hedge for those interested. And then there's also, the consideration of, you need to understand, this gets back to Munger's key point about not fussing, is what's the intrinsic value versus what's the, share price. And for example, I recently did a video. My May potential multi-bagger was a stock that trades below liquidation value, significantly below liquidation value, and it's part of a company that's growing significantly, so that over the next few years, if the business keeps growing, yeah, there's 200-300% upside. At least that's how I think about it. Same thing with June, where I called out another potential multi-bagger, where the downside strikes me as very manageable. If the price were to drop significantly from here, I would be very excited about it. And then you think, hey, could this be, up 200-300% upside over time using conservative scenarios? So I think this is a critical mindset you need to have if you're going to be in the investment game, because if you can't handle it, if you're fully invested right now, or you're levered invested, and you can't handle, let's say, a 50% drop because you're so levered, that's a vulnerable position. It's something for you to think about, and the time to think about it is before the 50% drop happens. Anywho, I hope this video has been helpful for you. If you enjoyed it, if you learned a little something about Charlie Munger, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Thanks so much for watching.